This video is created by Jagrat Creation. I wish to solve one sum on departmental accounts. Observe the sum on the screen. This is a sum which I intend to solve here before you. Complex Limited has 3 departments ABC. The following information is provided: opening stock, consumption of direct materials, wages, closing stock, sales. Stock of each department are valued at the cost to the department concerned. Stock of department A is transferred to B at a margin of 50% above the departmental cost. Stock of B is transferred to department C at a margin of 10% above the departmental cost. Other expenses were salaries, printing and stationery, rent, interest paid 4,000, depreciation 3,000. Allocate the expenses in the ratio of departmental gross profit. Important point: opening figures of reserve for unrealized profit in departmental stock, department B 1,000 and department C. So unrealized profit in the stock of B and C is given to you. That is the stock unrealized in the opening stock. Prepare the departmental trading and profit and loss account. Now see. Now opening stock is given to you, unrealized profit is given to you. When the goods are transferred from one department to another department, at cost, there is no question of unrealized profit arises. But when the goods are transferred from one department to another department at a profit, and out of the goods transferred, if some of the goods are left unsold at the end of the accounting period, then it is obvious that the profit charged by one department to another department at the time of transfer don't get realized, because the goods are lying unsold in another department, and department 1 and department 2 are under the common ownership. So unrealized profit issue arises. Same unrealized profit was there in the stock of B and C, and that stock profit unrealized at the end of the previous accounting period is carried forward as stock reserve in the current accounting period. Now during the current accounting period, this opening stock is presumed to have been sold in first because of FIFO method. The opening stock gets sold during the year because we presume that the stock movement occurs by first in first out method. So unrealized profit at the beginning of the year in the stock, in the opening stock, gets realized at the end of during the accounting period. So by end of the accounting period, that unrealized profit gets realized. So such unrealized profit is credited to general profit and loss account. Now on the basis of this information, let me start preparation of departmental trading and profit and loss account. This is my trading and profit and loss account. Opening stock 3,000, 4,000, department A, B and C opening stock. That I will write to the debit side of trading account. Just observe a transfer. 3,000, 4,600. Consumption of direct material 8,000, 12,000. That will be debited to department A and B. $8,000, 12,000 debited in this fashion. Wages debited here in particulars column. 5,000 and 10,000 gets transferred. So 5 plus 10, 15,000 is recorded in the total column. Closing stock recorded in the credit side of trading account. Let me transfer 4,000, 14,000 and 8,000. Total 18 plus 8, 26,000. Sales, department C, 34,000. Total 34,000. This is how this details already bifurcated given to me is being recorded. Stocks of department are transferred to department B at a margin of 50% of the departmental cost. So let me prepare a working note to find out the transfer price. Calculation of transfer price from A to B. Opening stock plus materials consumed plus wages, total 16,000. 50% above the departmental cost. This is the departmental cost, 60,000 into 50%. But before that, you are required to deduct the closing stock. If you deduct the closing stock, then and then you can find out the cost of goods transfer. So this is the total cost available for transfer. Out of the closing stock, 4,000 means stock that has not been transferred. So transferred is 12,000. 12,000 into 50%, 6,000. So transfer value is 18,000. Now 18,000 goods are transferred from A to B. B is the receiver, debit the receiver, B account debit, department B account debit to department A account credit. So B debit, A credit. This is how transfer value is worked out. This is an important working note. Now goods are transferred from department B to C at 10% above the departmental cost. So let me work out the transfer price from B to C. 4,000, 12,000, 10,000, 18,000 is an item with profit load minus closing stock. So this is the cost of goods transferred. Load is 10% above the departmental cost. 3,000. Transfer value 33,000. Debit the receiver. Who is the receiver? Department C is the receiver. Who is the giver? B is the giver. So credit the giver, debit the receiver. This is how transfer value is being worked out. Now I am given the all details. On the basis of that, let me find out the gross profit. So total of credit that is transferred to the debit side, 20,000, 47,000 and 42,000. 22,000 minus 3,000, 8,000, 5,000, 6,000. 47,000 minus 3,000, 3,000. This is how the gross profit is being worked out. This gross profit is transferred to the credit side of profit and loss account. Now let me debit the expenses. Salary is 2,000. Allocated in the ratio of departmental gross profit. So I have worked out the gross profit first of all, because I wanted to find out the ratio of gross profit. And in the ratio of gross profit, the expenses gets divided. So first I found out the gross profit. Now let me work out the ratio for gross profit. 6,000, 3,000, 3,000. 6 is to 3 is to 3. That is 2 is to 1 is to 1. 2,000. Distributed in the ratio of 2 is to 1 is to 1. So 2/4, 1/4 and 1/4. 2/4 means 1,000. 1/4 means 500 and 500. Stationery expense 1,000 distributed in the ratio of 2 is to 1 is to 1. So 2/4, 500, 1/4 of 1,000 to 50, same way 250. 6,000, 2 is to 1 is to 1. So 2/4 of 6,000, 3,000. 1/4 of 6,000, 1,500, 1,500. Interest paid, common expenses 4,000. Distributed in the ratio of 2 is to 1 is to 1. 2,000, 1,000, 1,000. Depreciation 3,000. Distributed in the same proportion. 2 is to 1 is to 1. This is a debit for depreciation. Now let me find out the profit or loss. 8,000 minus 6,000, 2,000 loss. 4,000 minus 3,000, 1,000 loss. 1,000 loss. So loss 2,000, 1,000, 1,000. Total loss 4,000. Debited to profit and loss account. The unrealized profit in the opening stock gets realized during the year. So it will be transferred to the credit side of general profit and loss account. So this 2,000, 1,000 plus 2,000, 3,000 stock reserve credited to profit and loss account. Now I want to find out the unrealized profit element in the stock of B and in the stock of C. That I want to find out. And that unrealized profit in closing stock will be debited to general profit and loss account and stock reserve gets created. Now let me find out. Computation of unrealized profit in closing stock, stock of B, 14,000. Now opening stock is sold. So 12 plus 10 plus 18 is the total cost element. In that 18,000 is an item with profit load. And this 18 plus 12, 40,000. 18 plus 12 plus 10, 40,000. 14,000 is a segment of it. So cost 22. 80,000 is the item with profit load. So 40,000 is the total cost other than opening stock presumed to have been sold and profit unrealized gets realized and credited to profit and loss account. So 40,000 is to 18,000 is the item with profit load. What is the proportionate amount with profit load for a closing stock of 14,000? So 40,000 is to 18,000. How much for 14,000? So 6,300 is the item, is a segment of cost which is a part of 18,000, holds a profit load charged by Department A when the goods were transferred from Department A to B. So transferred value is 18,000. Now transferred value is 18,000. In this 18,000, profit element is 6,000. So transfer value 18,000 is that profit element is 6,000. How much for this 6,300? So 1/3 of it, 2,100 is the unrealized profit. So unrealized profit in the stock of 14,000. For that stock reserve is created, general profit and loss account debit to stock reserve account. The other way to find out this 14,000 is a stock element. 12 plus 10 plus 18. 40,000. In this 40,000, profit element is how much? 6,000. So total cost 40,000, profit element is 6,000. So in 40,000, profit element 6,000. How much for 14,000? You will get the same value of 2,100. But this is the style that I recommend for the purpose of finding out the unrealized profit. Now, the same analogy will be applied once again to find out the profit element of A in the stock of closing stock of Department C. But that we have to do. We have to apply the same analogy to find out the profit element charged by Department A that is found in the closing stock of Department C. But this analogy is to be applied after deducting the profit element of Department B charged when goods were transferred by B to Department C. Let us do that. So, stock of Department C 8,000. Now, there is no other item. 33,000 is the item with profit load. And this 8,000 is a part of 33,000. So, 33,000 is the item with profit load. And this 8,000 is a part of 33,000. So, 33,000 is the total transfer value. The load item is 33,000. How much for 8,000? So, it is 8,000. Now, when this 33,000, the profit load was 3,000. What is the profit load in this 8,000? That works out to be 727. So, 8,000 minus 727. So, you will get the transfer value of Department A. So, this is the profit element of B is deducted from the stock of C to find out or to bring the stock at a level or at a transfer value level of Department A. So 7273, in that we are required to follow the same procedure once again to find out the profit element of Department A, profit element charged by Department A found in the closing stock of C. So 40,000 is to 18,000. 40,000 is to 18,000. How 40,000? 18 plus 10 plus 12, 40,000. In that profit element item is 18,000. How much for 7237? So this is the element of item with profit load. But how much is the profit load? That we have to work out. So 18,000 is to 6,000 profit. How much for 3273? So that works out to be profit element of 1091 is the profit element charged by Department A found in the stock of C. This is the profit element charged by department B found in the stock of C. Both together is the unrealized profit in 5,000. So for that, stock reserve is to be created. General profit and loss account debit to stock reserve account credit. Now you can find out the net loss at the end of the day. So 7918 minus 3,000. So net loss debited to profit and loss account 4918. This is how this sum gets solved. This is a important style of sum. I have solved this type of two sums and uploaded. This is the second sum. One is already uploaded on YouTube. I have tried to explain you these two sums. This sum, I feel that you have followed all these things. Thanks to all.